Bear with me while I get this back open again. Why does it keep doing that? Can you guys see that? Amy, can you see that?
Yes, I can.
Yep.
All right. Do we want to address these questions first? This circulated through some emails.
Yeah, that would probably be a good idea.
All right. There were a few questions that got circulated through emails. First one was about agreed prices versus force accounts. If the price has not been agreed to in writing prior to the start of work, the contractor shall keep and submit daily force account records until the work is complete. Therefore, it cannot be recorded as an agreed price, and that is true. If you start a force account, then you have to finish the force account. You can't then switch back to an agreed price. That was vigorously emphasized by our former director, Mr. Brian DeWald. The next question is about cash fringes, and I think, Mike, if you're there.
Yep, I'm here.
Could you help out with this one? You wrote a very good response.
Yeah. Basically, what that is that if you have cash fringes, you know, where they're paid directly to the worker, then what you're doing is you're entering a fringe rate plus the cash fringe amount, because the cash fringe total is there basically to apply the 6.4% markup to, but it's not going to be included in the labor subtotal. So you want to basically enter it twice. Like if their fringe rate is, they have to have 10 hours, their fringe rate is $20 an hour, you're going to want to put the 10 hours, it's going to be there anyway for the regular wages, but you're going to want to put the regular fringe rate in as well as the cash fringe total. And then that way what will happen is that the fringes will be carried over to the subtotal on your force account summary sheet, and then the 6.4% will get applied to you having added the $200 in the cash fringe field on the MERC 21, 22, 21-1, 21-2, whatever, however many sheets you have there. And then the workers' comp insurance reimbursement will also apply to your cash fringes there. But basically the answer is that it's true that the cash fringes don't get included in the labor subtotal, so you're going to have to enter it twice in the sense of putting in a regular fringe rate plus the cash fringe total on the MERC 21s, 21-1s, 21-2, and so forth.
Right. So the cash fringes are just a portion of that regular and premium fringe rate that is calculated in the labor subtotal.
Correct.
I hope that clears that up. All right, now the next one might be on me a little bit. Region 9, I guess we still do it the old way with force account items. In Region 9, if we do a force estimate, we pull the force estimate item back out and include a new force actual item. I guess the consensus was that that's not required. You can just call the original item your force account item, and once the force account is complete, you can adjust your dollar value up or down depending on which way the force account actual goes in comparison to the force estimate. The current force account spreadsheet does not allow change in service markup. Mike, do you have anything to add on that? I don't, honestly.
I was, I really, we were going to talk that over with Erica and Amelia, because I think the, basically what the RE is asking is that, because time-related dispute compensation, if you read the specification, it doesn't make any mention of profit and overhead 5%, as it does for, your extra work, 10905B. So it does look like, because the cell is basically locked in, at any time you put in a service, value for the services on your MERC summary on the spreadsheet, it's going to put 5% on it automatically. And it doesn't appear to be applicable if it is a service under time-related dispute compensation. So it looks like that field is going to have to be opened up to give the user the opportunity to put 5% or 0 down for profit and overhead. But we're going to, I'll talk that over with Amelia and Erica, and we'll go from there, and then, just confirm that is the case, because that's how I read the specification myself. I'm in agreement with the RE. So, it looks as though the spreadsheet's going to have to be updated to give the user the capability to make it 0 instead of 5% for the profit and overhead.
Okay. Yes, and that's for the very specific scenario of time-related dispute compensation.
Yes, absolutely. Yep.
Got it. And there may have been some confusion on comments I made about the wage rates for an individual worker. The spec allows for the wage rate of an individual worker to be up to 150% of the prevailing wage for that labor class. However, anything over 110% has to be prior approved. So they can be paid anywhere from 100 to 150% of the wage rate. But if it's above 110, it needs to have prior approval, and should show up on prior certified payrolls. So I hope that clears up that confusion. That's it for the questions and comments from the last session. Now we can move on. We left off here at the weekly summary of force account labor. The top section here is auto-filled from the cover sheet. This is...
We have a couple panelists that aren't muted, and we're getting a little bit of feedback. If everybody, Eric, that would be great.
Am I the one that has to mute them?
No, they have to mute themselves. I can't mute them.
All right, that's good. Oh. Do we know who it is?
Yeah, I'm going to call you out. Heather, you got to mute yourself.
Imagine that.
I imagine.
Hey, sorry.
Monkey wrench in my operation.
I was muted and then I started working on something else. Sorry, guys.
All right. So the top portion here, workers' comp, payroll limitation, the workers' comp rate, they auto-fill from the cover sheet.
Hey, Eric.
Yes.
Can you also either zoom in or hit your slideshow so people can see?
I'm sorry, should I?
Everything. Actually, if you hit slideshow, you're going to lose animation, so just zoom in as much as you can.
I don't know what I did different last time. Whoops. All right, how's this? Is that better?
Yeah, I got a couple yes responses.
Okay, good enough. Top portion here, auto-filled from the cover sheet, payroll limitation. Pay period ending is critical. That should match up with your daily records so that we know. We kind of break it down by week, makes it easy to check, makes it easy for me to review. You just pull out the MERCs ending in 9/2/16, You should have just 4, 5, or 6 or so, and makes it a lot easier to go through and check the weekly labor. Also filled in from the cover sheet is basic contract information, contractor, contract number, item number, and description. Start here with the list of employees. Preferably, according to the spec, they should be last name first, first name last. Should have labor trade and group. You see a couple here, groundmen. I'm not sure if there are classifications, groups of groundmen, but you got the labor A, groundman, operator A. Regular rate, premium rate. From the payrolls, you should be verified, wage rate, scale, and against the payrolls. You should be checking those. I mean, if you're doing your due diligence, when a force account comes up, you'll have the contractor and you will have a good handle. You're doing your wage rate interviews, you're checking them against payroll. When the force account starts, there should be no hiccup. Regular premium fringe, they come right from the wage schedule. Check against payrolls, as well as we'll jump over to the cash fringes. This is all shown on the payrolls. Guys in the field office, check those, because as a regional change order person, I don't have immediate access to the payrolls. So it's very difficult for me to verify. If I see something funny on a cash fringe, I'm just going to end up calling you at your office and saying, hey, check this out. Is this right? Regular and premium hour totals. They come right from the MERC 31s. That's initially where my main focus is when I'm reviewing the labor summary. I'm going to lay out the MERC 31s for the day, for the pay period that week, and I'm going to tally up the hours, and I'm going to make sure it matches. One thing I do want to mention on recording hours for both labor and equipment, I think the spec says the hours should be recorded to the nearest 1/2, which is a good practice. Don't want to see, I've seen decimals. I mean, 0.5 is okay, but I've seen crazy numbers, you know, 1/4%, 8%, you know, quarter hour, 1/8 hour. That just makes it difficult to review, and I think the spec allows for, you know, a 1/2 hour increment. As far as the contractor is going to enter the data from the employee list over to column G. HIJ&K autofill does the math for you, and those formulas cannot be changed. You go down to the bottom, totals for pay period. All this information is carried forward to the MERC 20 labor summary. So all that work is done for the contractor, and we looked at that. We looked at that before, where they could show multiple weeks. See if I can easily go back. They can show multiple weeks here, M21-1, M21, they can just go on for weeks. That's how the labor gets summarized on the labor summary. You should be initialing these checked. I like to see that because that way I know somebody put their eyeballs on it and actually did something. What I like to see even better is if I see little red check marks next to those hours, I know somebody really did their homework, went through this package with a fine-tooth comb. Doesn't mean I'm not going to review it as close as I normally would, but it just gives me a sense that I'm probably not going to find anything too wrong with these numbers. And that's just makes my life and your regional change order person's life that much easier. Because these force accounts can get crazy. It's a lot of paper. If these go on for months, I've had force accounts that were in the thousands of pages, which is not fun. All right, now we're going to move on to materials. The MERC 22. The material costs include transportation to the site. This could be documented as delivery or a shipping charge on the material invoice, or it could show up as a prime contractor labor and equipment. They could have, you know, two guys went down to wherever to pick up form lumber with a truck and a trailer. Now, these quantities should be measured as actual quantities delivered and incorporated. No reduction for required overlap or waste. I think we talked about this a little bit before about not having any strictly defined pay lines, such as you would on your original contract plans or standard sheets. Consumables such as oxygen, acetylene, propane, welding rods, grinding wheels, saw blades, hammers and drill bits, drill steel, tooth bits like saws. These are consumed in the progress of the work. They are considered to be materials, and they are reimbursable plus appropriate sales tax. Also included in that would be maybe things like form lumber and other materials consumed in the progressing of the work are considered in the overhead and profit, and no extra payment will be made. All these costs will be documented with bills, invoices, receipts, and salvage credit. This was left out of the original presentation here, but this is something I run into every now and then. If you have some sort of durable good like steel sections, if a contractor buys a 10-foot section of angle to use as a temporary something on a force account, and they remove that 10-foot section and it's still in good shape, not damaged, the department is within its right to ask for a salvage value for that. Typically, the contractor would keep the material, and we would pay them only a percentage of what the total cost to purchase that piece of material was. Depending on your situation, that particular situation, you got to just use your best judgment. Get with the supervisor of the project, engineer in charge, possibly even pull in the construction engineer to just come up with a reasonable salvage value for that, because a chunk of steel can, in a scenario like that, can be used many times. All right, here's the material summary. Material ID. These ID numbers, M1, M2, they're filled in automatically. That's part of the spreadsheet. What this does for you is, see, we got M2 there, 2-inch galvanized clamps. You should be able to go through the material invoices and receipts and very clearly see M2 somewhere. It should be written right on the receipt, M2, 2-inch galvanized clamps. And you can follow right through invoice number, units. Here again, we're talking about a normal unit. Obviously, a clamp is going to be in each. Quantity used from your Merc 31 and the unit price. Sometimes the unit prices, they get a little funny sometimes with small pieces, small parts. They might be based on 100 quantity or gross or something like that. So just keep an eye. I mean, you know, this might be $2.10 per 100. You just got to do the math. A really good thing is when your field office guy or the contractor will show you that quick little math, because you're going down through materials invoices and you're looking for something, see, costs 21 cents and you're not finding it right off the bat. If they show you that math, it just makes life so much easier for your change order specialist. Quantities from the Merc 31s, invoice numbers, unit prices that come from the material invoices. And one thing I want to note is that just because this is a force account, it's a 950 item, if you have these materials, all need to be certified, approved list, you know, manufactured material certification, all that still applies. And here I broke out separately sales tax. There's no sales tax applied to anything on this particular force account. This is all materials permanently incorporated into the work. The temporary materials and expendables can be reimbursed the appropriate sales tax.
Eric,
yes.
Speaking of expendables, we have a question in the chat.
Okay.
Concerning PPE that is not standard issue for a specific operation. For example, a cleaning operation dealing with waste, lead, or wet conditions. Can you quickly address what would be acceptable, what wouldn't, or who to contact about that?
For me, it would depend on, partly on the original scope of the contract. If it was a bridge painting contract, and some, you know, and some maybe a bridge was added or a span was added or something, I would talk to your regional change order person about that. I don't have a general rule. I think we would pay some portion of it if it was, you know, really outside the scope of the original contract. I don't know if anybody has anything to add to that. All right, carrying on. Should be checked initialed. That's nice to see. Red check marks next to unit prices and invoice numbers is also really great for your change order guy. And the total down here at the bottom is carried forward to the Merc 20 in the material sections. Equipment other than small tools shall be of suitable size and capacity. We talked about this earlier, not wanting to bring huge excavators out to just dig a small conduit run, but if that's what the contractor has on hand, You got to look at the cost of shipping in a mini excavator and all that. So you just got to use your judgment, but it should be generally of suitable size. And if the contractor does elect to use a higher rate equipment, then payment will be based on the suitable equipment. There again, you got to factor in the cost of bringing in the suitable equipment in comparison to the higher rate equipment that the contractor already has on site. Equipment usage recorded to the nearest half hour. Small tools. I danced in the street when they added this to 10905 as I fought it for years. Small tools are defined as equipment with a rate of less than $2 an hour or an original purchase price of less than $500. We're going to see that here in an example in just a little bit. You should not pay rental invoices. Blue Book rates are used for all compensation for equipment on force accounts. Blue Book Web is available online for DOT staff. Sometimes it's a little glitchy, but it does work. One thing I want to warn you guys about is don't get in the habit of fetching equipment rates for a contractor. They should have their own account. A lot of times, you know, they already have their equipment plugged in and ready to go. But they should have their own account. We should not be regularly providing the contractor rates on equipment. I must admit, I've done it in the past. Smaller contractors, maybe first-time state work contractors, I've helped them out a little bit, but I do not like making a habit of it. All right, here's the example I was talking about. All right, this is not the best example because under the current specification, this piece of equipment would not be reimbursed to the contractor unless they could somehow show that the original purchase price was greater than $500. You can see down here that the monthly ownership cost is $125.01. All these rates are divided by 176, giving you an hourly rate of only 71 cents, which is less than the $2. Therefore, this is considered small tools. I wanted to show you that first just because it makes understanding this next slide a little easier, that the cost of mobilization, demobilization, truck and trailer, similar to materials, except you normally wouldn't have a delivery cost on a piece of equipment. This is generally going to be teamster, tractor, lowboy, you know, bringing in the excavator, bringing in the roller, bringing in the whatever. And a lot of times contractors miss the fact that they can be reimbursed up to 50% of the ownership cost while that piece of equipment is in transit to the work site. Usually you'll see the operating cost and the monthly ownership cost for the tractor and the trailer. A lot of times they miss that 50% ownership on the piece of equipment that's being hauled. Like I said, those hourly ownership rates, the monthly ownership rate for the Blue Book to get the hourly rate is divided by 176. We have two adjustment factors that are used for force accounts that are not used on agreed prices, but on force accounts, that hourly rate is multiplied by the region adjustment factor and the model year adjustment factor. the contractor's done it right, that equipment watch sheet will do that math for you. And the bottom, here's those adjustment rates here, if you can see that. The monthly, $120 on the top, adjusted for the region, adjusted for the model year, comes out to $125.01. Reimbursement for hours of actual use at the hourly rate, hourly ownership rate plus operating cost. So that's what the contractor is reimbursed for the work. Go back here. Estimated operating cost hourly goes in column F. If the equipment is required by the department to be present but is not working, so if you have a pump that's on standby, or pumps are typically what I see it on, we pay them 50% of the monthly ownership rate. That's your adjusted monthly ownership rate with no operating cost. It's just sitting there, standby, ready to be used. Say we know there's a storm coming, we got to culvert it, we got to keep dry. We'll pay the hours at 50% of the ownership cost. Blue Book operating rates for hours of actual use. This includes the cost of preventative maintenance, fuels, lubricants, and other operating expendables. And this rate does not include the operator's wages. No established rate. Rates are not established in the Blue Book. For a particular piece of equipment, the contractor shall contact the Blue Book publisher to get a rate established. This typically for specialty equipment, Blue Book calls them a custom rate. When contractors subscribe to the Blue Book, they get depending on the level of subscription they have, they will get a certain number of custom rates that are included in their subscription. I have called Blue Book. I did call them once, and they were willing to generate a custom rate for me with, I think it was a guide rail post pounder. So that's something available to the department as well, but I would caution to use it too often. The maximum ownership cost. Reimburse the contractor for ownership costs up to the original purchase price of the equipment. Check the purchase cost of the equipment when the hours become really high. This I've run into before. It can be tricky, or it was at the time, tricky to figure out what the original purchase price was. We had something called the Green Guide. I don't know if we still have it. I did not have a current copy. What I ended up doing is working with the contractor to figure out, a verifiable original purchase price of the equipment. So if your hours start to really run up, this happened to me on pumps. Again, pumps ran for months and months and months and months, and we exceeded the original purchase price. You'll pay up to the original purchase price, but you will still continue to pay the operating costs for that piece of equipment. Here's the force account summary of equipment. Equipment ID number should be indicated on the equipment watch cost recovery sheets, just like materials. The inspectors should record and can be checked against this form for the equipment model, year, type, manufacturer, model number. One thing I'll say, E1 here, 2011 pickup truck cab configuration can change the price. Four-wheel drive, two-wheel drive obviously can change the price. I'm going to guess there's several configurations of a Ford F-150 for 2011. So that can be something you want to record in your, or have your inspectors record in their daily work report, so that we can make sure that we're getting the actual correct rate for that piece of equipment. Hours of actual use come right from the dailies, Mark 31s. Column C, the Blue Book monthly rate with factors. We looked at that Blue Book sheet. For E2 here, it should be clearly written at the top, E2. You should be able to follow right along. All this will make sense. It's an on-highway light-duty truck. This is a cargo van. That's a good piece of information. It's 40, 250, 8 hours used. And we looked at the column F, the operating rate, where it shows that on the cost recovery sheets as well. There was a little discussion about standby hours. Like I said, it's we pay standby when the department has required that piece of equipment to be present. It's not just for, hey, they used a piece of equipment for 2 hours this morning and then it sat all afternoon. We didn't require that piece of equipment to be there, so we're not going to pay the standby or idle time. Total from column H carried forward to the MERC 20 force account summation. Initial it checked. Like I said before, check marks next to these Blue Book hourly rates and hours are great. Lets me know somebody looked at it, because I will go back through every MERC 31 and look for equipment piece 1, equipment piece 2, and I'll tally up those hours myself. This is something I'm going to restate, but the equipment hourly rate, our computer has a monthly rate divided by 176 plus the estimated operating cost. And if you're calculating a standby rate, you just take that monthly ownership cost divided by 50% times the hours it was on standby. And that will be what we reimburse. For equipment without an operator that is designed to operate at a continuous long-term basis, such as a pump, portable variable message boards, temporary traffic signals, the contractor will be reimbursed for a maximum of 176 hours a month for ownership cost. If the total on the MERC 31 is more than 176 hours over 4 weeks, limit the hours reimbursed for ownership cost to 176. However, there is no maximum, no limit to the reimbursement for operating cost. So if you have a signal, it's running 24/7, temporary signal running 24/7, you're just going to reimburse the contractor for a maximum of 176 hours for ownership cost for that 4-week period. Okay, now we're going to move on to
Aaron.
Yes.
Sorry.
No problem.
We have a question. When it comes to operating rates in the Blue Book, do we accept user-adjusted operating rates created by the contractor? For example, contractor went into Blue Book site and entered in a higher fuel cost than the one used by the Blue Book and got a higher custom operating cost as a result.
I would say no. I've never run into that, but I wouldn't be happy about that.
No, our spec says that we will only adjust based on age and region. No other adjustments are allowable to the published Blue Book rates.
Yeah. Didn't realize that was a function of Blue Book, but yeah, I would not accept that. Summary of services. Now, these are not subcontractors. And they don't go through the subcontractor approval process, and they can only work for a maximum of 10 days on your job. Now, these don't have to be consecutive days. They can work a couple days at the beginning of the month, a couple days at the end of the month. And they still qualify as a service, but they cannot work in excess of 10 days. All services must be substantiated by invoices identified by the reference numbers, S1, S2, which will reference back to this ID number on the summary of services. Contractors entitled to 5% profit and overhead on the total service fee. Like we talked in the beginning, they are looking at making an adjustment to that cell for delay compensation, dispute compensation. As always, check initialed at the bottom, and this service summary gets carried forward automatically to the MERC 20. Work zone traffic control devices, I don't see this a lot. First thing I would do, if I saw work zone traffic control devices on a force account, is I would get with the supervisor of the project and determine if the work zone is outside the scope of the basic traffic and control item in the contract, 61901. I don't see these very often. The rates are in the spreadsheet, paid by the number of days used. Trying to find my notes here. I really don't have too much to say about this one here. Again, check initial, this is carried forward. I've not seen a case where we required additional work zone in quite some time, but this is how it can be summarized. Now we're going to move on to force account change order documentation. This is a big one. Attach only the directly pertinent documents to the change order header in Site Manager. do not attach certified payrolls, prevailing wage schedules, internal transmittals, or anything does not directly support the force account change order. Certified payrolls is a big one. They used to contain, private information on the employees. I think most contractors have gotten away from using social security numbers as ID numbers and all that. But that's still a big thing. We do not want to see certified payrolls attached to a header in Site Manager. We also don't want to see the prevailing wage schedules. They're available online. We don't need to see them. Anything that doesn't directly affect the price or the decision making for this particular force account, we don't want to see. You want to review any emails that you do attach. You just want to make sure that they don't include any individual opinions or dissent that doesn't support the final decision to do this force account. Things from structures, geotech materials, traffic and safety, and any other pertinent DOT group that gave you professional guidance in developing this force account. Include that, but nothing superfluous or nothing outside of directly incorporated in the force account. All right, now here's the order they want us to attach the force account records. Now this can get to be a little bit of a problem. Contractors don't always follow this. Can be difficult for field staff to, if it's a big force account, to rearrange all these forms, rescan everything, but ideally this is the order we like to see things. The authorization of extra work, Con 104, first and foremost. Force account cover sheet. And then the summaries, 20 through 24, including the work zone traffic control devices. The contractor's documentation of insurance rates. This is a big one now with the EMR. For the workers' comp EMR letter 1.0, it will not get approved without that letter. Sometimes insurance companies will include, the general liability insurance on the same letter. Sometimes they're separate, but it's critical that it's clearly stated what those rates are and that the workers' comp based on an EMR of 1.0. Materials invoices numbered M1, M2, M3 correspond to the MERC 22. Helps in your review, helps in the regional offices review. Equipment rates labeled to correspond to the MERC 23. Same with services. And your blanket attachment B if your change order is greater than $20,000. Typically, most jobs with a big force account, you're going to be over 20,000. Your region, I don't tell my guys that you have to process force accounts on a separate order or anything like that. I don't know if that's a department policy, but when you finish up your force account, you got to finalize, signed, checked, put it on an order. You may have increases and decreases and other new items, agreed prices. Throw it all in the order. If that order happens to come up to a net increase of more than $20,000, then you'll need the blanket attachment B. All right, here's a brief synopsis of the review levels. When they leave your field office, they'll come to the regional change order specialist and or the area supervisor. And my emphasis and their emphasis will be on labor rates, workers' compensation, materials cost, equipment rates, insurance rates, invoices and documentation, and payment provisions. And in Region 9 here, I may go one step beyond that, and I check all the hours, labor, equipment hours against the MERC 31s. I basically go through every letter, every number in the entire force account. Regional construction engineer's emphasis will be more on the contract scope, process, and documentation. They're looking at, does this force account fit scope of the contract? And they're in the loop, at least in Region 9, they're in the loop typically if it's a big force account early on. So they're not surprised by a big force account when it comes through. The Office of Construction's emphasis will be on the contract scope, insurance rate, payment provisions, and the overall documentation. They're going to be the ones shipping it up to OSC, and they're going to pick it apart. So they're kind of our last line of defense for any little thing that was missed or not documented correctly. And then it goes to the Office of State Comptroller for their final review and approval. And that's it. Change order approved. This looks like my desk minus, I got a few more empty coffee cups laying around. I feel like I went through that fast. Do we have any questions?
So if our other panelists can check their chat and see if they were addressed individually, looking at the ones that went through all of us. To clarify, equipment is recorded to the nearest half hour, but labor can be to the nearest quarter hour per the current specs.
Okay.
Can the contractor claim that cash fringe is paid and it is shown under deduction in payroll?
I don't know.
Yeah, the contractor can't claim anything that they're not claiming on their certified payroll, first and foremost. But that circumstance, we're not 100% sure what you're asking. I've gotten some clarification from the woman who asked about operating rates being adjusted. So she's talking about the contractor adjusting their fuel costs in Blue Book and affecting the operating rate. And I've asked her to send us a sample of that, and we will follow up with main office, because that's a new one to us, that we didn't realize the contractor could make personal adjustments to the operating rates in Blue Book. So we'll have to follow up with that and have main office make a decision on that one.
Yeah.
And a question was asked about services. Is it 10 days or is it based off of hours? Say that a service is on site 1 hour a day. Are they still held to 10 days and therefore 10 hours, or can they be there for up to 80 hours? Now the spec says work services are limited to 10 work days, and it only defines work days as a calendar day that the state does not consider a holiday. So again, that would be a case-by-case basis as to what your service actually is. and you'd have to discuss it with your regional change order specialist. Question that's asked, Eric, and I'm not 100% up on the latest specs when it comes to sales tax. Is overhead and profit reimbursed on sales tax?
Yes. Yes.
That wasn't Eric. Hi, Mike.
Hi. Yeah, that used to be, it used to be not reimbursable prior to the 2015 spec rewrite, but, you know, as of jobs let January of 2015 and forward, it is, you do get, you know, profit and overhead on sales for your non-permanent materials. Or for sales tax, I'm sorry.
I will address the latest question privately with the asker. Can the tack coat truck company be a service? Not if they are an approved subcontractor. And that's the real clincher here, folks. If you have a trucking company, a tack coat company, etc., approved as an approved subcontractor, they are then bound for force account work to provide labor, materials, equipment, and insurance breakdowns. They cannot be included as a service if they are elsewhere on the contract as an approved subcontractor.
Does the work service spec still reference the fact that they can't do 100% of an item's work?
That's a good question. I don't know the answer to.
Okay, I don't either. It used to. That used to be a big catch with things like tack coat. Is a tack coat is its own item. It's, you know, so that service would be doing 100% of the item, which would then not allow them to be a service.
Eric?
Yes.
The spec does read it. It's still the, whatever, the aggregate of 10 days and not 100% of an item.
Thanks, boss.
Sure.
There you go. So that's another thing that you want to look at when you're reviewing service, is that if they're doing 100% of an item, they can't be considered a service.
All right, we have a lot of conversations going on here. I'm just scanning through to make sure that we've hit on the points that the mass public needs to know about. So since we do pay overhead and profit on sales tax now, that also includes service fees or sales taxes paid on the service. The 5% overhead and profit is calculating on that sales tax as well on the spreadsheets, is what I've been informed. We do agree with you, person from Region 3, that the OE should be provided with a really good office chair in the field office spec, especially if there's a lot of force count work, because you're going to be on your butt reviewing all this paperwork. If the sub is less than 10 days, payroll should be theirs or Prime's payroll. If a sub is a sub, again, if a firm is on site performing work and they have been deemed an approved subcontractor, they are responsible for all of their own management. They need to provide certified payroll, they need to provide proof of the various types of insurance, and if they're on force account work, they need to provide their own labor, material, equipment, and insurance breakdowns for that work. A sub is a sub, period. All right, I don't have any other questions. I don't know if anybody has any privately asked questions. If there's any other questions, we do have, a half an hour still for today's session, and we're not prepared to move on to the next one as of yet. Please use this opportunity if there's anything that we've covered in the last sessions that was unclear or that you'd like more information about. Before we close the session out, I will reshare the location for those of you that missed it of where the presentations are posted on the P drive. We have a folder for the recordings that are MP4 files, and we have a folder for the PowerPoint presentations. The one for the force accounts will be posted later today. We did not post it after last week. If work is less than 10 days, they don't need sub-approval. That is incorrect. You need to read section 100 of your spec book and read the definitions of professional service, work service, and subcontractor. Being on site less than 10 days does not automatically mean you're a service anymore. Used to be back in the day, but now we have very clear definitions of professional service, work service, and subcontractor. Workers' comp calculation for piecemeal work. Not sure if this was covered. I'm not sure exactly what you're asking, but when you're putting in your labor on a force account, you have daily MERC forms and you have weekly summaries. The weekly summary will take into account the weekly limitations, and Eric, please correct me if I'm wrong on terminology. It will take into account the weekly limitation of the workers' comp if your dailies are entered properly into your weekly summaries.
That is correct.
So if it's piecemeal work, they may never reach a limitation that would cut off the workers' comp calculation, because it's based on the number of hours in a week that a worker works, not the number of hours on a force account. And again, maybe Mike Dreslow, since we have some time and we have more people on the call than we did earlier, could you please address again how we should properly be showing cash fringes?
Sure. All right, so if you see where the L1 worker there, so they've got a cash fringe amount of 249 hours. Okay. Now, whether that's the entire fringe amount or if that's going to, coincide with their fringes, the hours times the rate. Sometimes it's broken down, but say it worked out to $249 by going by, regular fringe times fringe rate, meaning they were, they're not paid directly. In that case, you're going to put 249 in cell G there, and you're also going to put in the fringe rate in cell C. So that way their fringes, whether they're regular or whether they're paid in cash, it'll get carried over to the labor subtotal on the MERC 20. And then the 249, if you were to just enter 249 and not put a rate in for your fringes, then the subtotal, they're not going to be reimbursed. All that'll happen is the 6.4% will get applied to the 249, and the workers' compensation and reimbursement will include the cash fringes. But the fringe total itself will not get carried over to the MERC 20 labor subtotal. So make sure that you enter the cash fringe, the regular fringe rate and the cash fringe amount on your MERC 21s.
Thank you, Mike.
Okay.
And I've received a few people clarifying what they're asking about with the piecemeal. So what they're asking about with the piecemeal is, what if the worker works on contract item work for 4 days and only does 1 day of force account work?
They're only going to show up on 1 day's MERC 31, MERC 31, which will be carried forward onto the labor summary, the MERC 21.
Correct. And if they're working on the force account work early in the week, you're reflecting the certified payroll for those specific days, and they may not be getting a limitation on the workers' comp at that point. However, if they're doing the force account work later in the week and they've already exceeded the workers' comp limit for the week, it's still not going to reflect. So I don't know that, unless it's an excessive amount, I don't know that we're going to make those calculations ourselves and deduct them from the force account. But yes, those of you in the audience that are bringing this up, you are correct. There is the possibility that we may overpay them workers' compensation for that employee for that week on the force account. But again, you know, think about the level of accounting we would have to do individually between the field office, your regional reviewer, the main office reviewer, et cetera, to recoup that cost. But if, you know, and think about also, if they're on overtime at the end of the week doing force account work where they've done contract work all week, again, we have to eat that. It's whatever the certified payroll is showing. So they're going to get a little bit of a freebie from us if they have somebody working excessive workers' comp hours. We're not going to, I can't see that the department as a rule is going to dictate to the contractor that they can't put workers on force account at the end of the week if they're already into overtime status or excessive workers' comp status. I have a question here, again, about the cash fringe. If you could clarify your question, please, that just gave me numbers concerning cash fringe.
They're probably questioning the numbers that are on this example, which I don't believe are correct.
Oh.
Yeah, because they don't balance. It's actually that's true. I mean, it's not, they don't balance the, you know, the hours times the.
Yeah, this is, I think this may have been an example of what you don't want to see.
Well, I also see that it's from 2016, so our specs have definitely changed since then. We just haven't had the time to update all the slides. Again, I don't think that we're going to start entering into negotiations for lowering a workers' compensation rate because the piecemeal work is creating excessive workers' comp. You know, between health and safety and contract work and contract compliance and all that, we really don't have time to be worrying about excessive workers' compensation reimbursement on a force account that's occurring concurrently with contract work.
And if the whole force account is piecemeal, unless it carries on for months, the entire force account is not going to be all that expensive. If you're just working at it here and there, you got a few hours here, a few hours there, that's not going to add up to much. The cost benefit of us trying to track down small excess of workers' comp paid is, we'd be in the red, for sure.
All right, I'm being asked, and we were asked this earlier in the sessions, if we could pull up a certified payroll sheet and teach the audience how to decipher it. Not today, because we're not prepared to do that. We will try to get some examples prepared, and if we have time in the next 2 sessions, we will do what we can to bring those up. If you have any questions about deciphering payroll sheets, your compliance unit, first and foremost, should be able to help you. But again, your change order specialists within your region should also be able to help you decipher how to translate what's on your certified payroll sheet to your labor summaries. So yes, the cash, and Mike, correct me if I'm wrong, the cash fringe rate that you show on this force account summary should equal the exact cash fringes that were paid. And your fringe rate should be your fringe rate, period. And then whatever portion or all of that that's paid in cash should also be reflected in column G.
Correct.
Yeah, and that's the way you want to think of it. The cash fringes are just a portion of those regular and premium fringes. So in this example, it appears that the cash fringes exceed the regular and premium fringes, which can't happen.
Right.
This cash fringe would max out at $227.90.
And it's pretty easily discernible on a certified payroll what's, you know, a cash fringe amount. However, as Amy said, we don't have an example for this period here.
This might be a small tangent. I have a question. When we look at certified payroll, can we look at wage rate interviews as well? I've had issues with some unions here in Region 11, which sent me down a rabbit hole with the Department of Labor. That's a compliance issue right there, and a DOL issue. Your certified payroll needs to accurately reflect what the contractor is paying the employees. If your wage rate interviews are providing different answers, then that is something that needs to be addressed outside of your force accounts and hopefully well before you get into force account work. Your compliance unit and the department of, first and foremost, the compliance unit should be called in if you have any kinds of those discrepancies, and then they have Department of Labor contacts where things can get ironed out. And yes, in the lower regions, 8, 10, and 11, we seem to have more union issues with certified payrolls versus union agreements versus prevailing wage rate schedules. But as a whole, the Department of Labor uses the union agreements to create the prevailing wage rate schedule. They're not always perfect. They don't always get it right. At minimum, your workers need to be paid the prevailing wage rate schedule. If you do have a discrepancy between a union agreement and the prevailing wage rate schedule, DOL has been known to make modifications to a specific project schedule, and or they will send out an amendment to a published schedule to rectify problems that are brought to their attention. So you're not going to reflect wage rate interview information onto a force account. You're only going to reflect certified payroll onto a force account. But if you're finding inconsistencies, then you need to bring it to the attention of your compliance unit and possibly the Department of Labor. I hope that answered your question. And if you don't already know, those of you in the audience, you know, certified payroll, compliance, DOL issues are all another, you know, 7-week session we can have, but here we're just trying to focus on change order information. But you all have resources within your region. Not only your change order specialist, but you have a MERC specialist, you have a site manager trainer / administrator, you have your compliance unit, you have your safety coordinator, you have a finals engineer that can help you figure out what's got to go in your boxes. You have all of that. This is just our attempts to have a statewide consistency as far as what is and is not allowed by main office, and to educate everyone, since we are stuck with not being able to have in-person trainings for anything. But again, each region handles things slightly different. The latest question from a user in Region 10 about milling, that is totally up to your EIC, your area supervisor, your regional construction engineer with how you're going to record, handle, and compensate that situation. Force account work, for those of you that can't see the question, force account work is not cut and dry. It's not cookie cutter. It's not the same for you and me and Eric and Eli, you know, across the state. Every time you can't come to an agreed price agreement with a contractor for additional work, it's going to be a different situation as to how you're going to record it, how you're going to compensate it. We have different types of work, different units of measure, things that can and cannot be easily quantified and calculated. When you get into those sticky situations, don't be an island. You know, get people that may have experienced on another project involved, or get your RCE to make a determination as to how your region is going to handle that type of situation. No two force accounts are alike, and no two force account reviews can easily follow one single checklist. Everything's going to be slightly different depending on who you are, who your contractor is, where you are, etc. Do any of the other panelists have private questions that they've received? And frankly, as I keep honing in on this question, only I can see, if you can't come to a determination to split out what is contract work from what is extra work, maybe you're going to keep records on the entire operation and you're not going to pay it through your contract item. And I'll repeat the word maybe. Again, you have to make that determination as to how you're going to account for this type of work. It's extra, but not easily definable from what your contract work included. Just because you have a contract item doesn't mean you actually have to use it if there's a change in the scope of that item of work, or the site of that item of work, etc. Do Eric or Mike have anything they want to add or any questions?
Yeah, I would say, I mean, obstructed drilling would be a good example of that. I mean, if you've got production and, you're drilling for, micro piles or whatever, and it can be hard to know what's extra work and what's production. I mean, to a certain depth, you're paying under structure excavation too, so that could be an example. I mean, as Amy said, I mean, but that doesn't mean that that's what you're going to do is just not pay them for the production item. But that's an example when it can be very hard to know on what's on the Merkle 11s could reflect the whole, production work on obstructed and obstructed drilling. I mean, it's something that's gonna, as was said, it's not really cookie cutter. It's not a, one size fits all scenario. You got to take it, as each individual, situation. But that could be an example where you wouldn't pay the production item. I would say also with the Merkle 11s for the equipment hours, if you do try to put on a Merc, your equipment summary sheet to a quarter hour, it's just going to round up to 0.3, by the way, just so you know. So that's why when the spec says to the half hour, the Merc, equipment summary sheet is designed to reflect that. 0.25 is just going to put 0.3. So, always only use half hour increments for equipment.
Again, I put into the chat box for all participants to see the location of the PowerPoints and recordings for all of the change order sessions so far. And I am going to attempt to share that location on the board as well. I've been making every effort to get these recordings posted by the afternoon or morning after. They have to be converted from the format that they're in, so it does take a little bit of time. If you can't see that location, then I think I need Mike or Eric to stop sharing their screen. Please also share this location with any of your coworkers, office mates, firm mates, or consultants that may or may not have been on today, and I will keep posting it in the subsequent sessions. We have 2 more sessions left. Next week, we will kind of wrap up everything we've gone over so far. How do you get that into a change order? Again, what your packages need to look like, and so on. And then the last week we'll be discussing time extensions, and we'll have representatives from main office on for that. And the Region 3 person who just sent us a message, thank you very much. We appreciate it. So if there's no other, oh, we have one more question. On a project that is based on work orders, does standby hours apply to every piece of equipment or just some equipment? That's a determination you need to make within that project, within your region. Work order contracts are different. Again, this training was geared predominantly towards regular design build projects. This does not necessarily cover all the nuances of a design build for those of us with those contracts, and it doesn't cover all the nuances of a work order and or a force account, or not a force account, I'm sorry, a where and when contract. So as far as what equipment needs to be on site or will be allowed on site or will be compensated needs to be discussed up front between the engineer and the contractor. If a master mechanic or maintenance engineer are not shown in the payroll, does that mean that they are not included in an agreed price or force account work? If they're not shown on the payroll, you don't have proof that they were paid and you don't know what rate they should be included on the force account as. If they're being included on force account work, they sure as heck need to be included on the certified payroll. And this again is probably a nuance that we face more down south here in regions 8, 10, and 11, where the union agreement requires a master mech or a maintenance engineer to be on site regardless of whether they actually perform work or not. So again, that should be that's probably a regional policy that's been established, and inspectors should be made very aware that they should look for those people because they are a special type of person on site, and they should be recording whether they were there or not for force account work, and then the engineer, area supervisor, RCE will determine how that will be compensated. If there's other contract work going on at the same time as this force account, we should not be solely compensating them for all of their time on the force account work.
Yeah, it's only for the hours they show up on the daily, Mark 31. And if they don't show up on the certified payroll, I believe you can request, you know, if it's after the fact, they're on the payroll, everybody agrees, yeah, this guy was here. You can request an amended payroll, is that correct?
Yes. But again, we have to have proof that they were on site somewhere. So if
right.
you're in a situation where that's a common thing, you know, make sure that we know they were actually there before we agree to paying for them to be there and not actually perform work. But if we do find that they were on site and they're not being included in the certified payroll, you should be asking your contractor to amend their payroll to accurately reflect who is being paid for that project. And I'll use that as a shameless plug to the OEs. You should be spot checking certified payroll against inspectors' DWRs. It's the inspector's responsibility to say who was on site, and if they were not on site for the entire workday, what hours they were on site. And those spot checks need to be made when reviewing certified payroll. You don't just look at payroll and say, yep, prevailing wage, OSHA cards are there, EBO's been filled out, we're good. You have to spot check that those payrolls are accurately reflecting what we have recorded for labor on the project. All right, well, thank you very much, everyone. I'm going to stop the recording, and we're going to end the meeting. We'll see everybody again next Tuesday at 9:30. Have a great day. But I can't figure out how to stop the recording.